Hey guys, this is Rudy coming at you live from Palm Beach in Florida. It's Tuesday. It is August the 1st. Can you believe it? It's August. It's almost the end of the year. So this week's going to be a busy week with all the energy companies that are reporting earnings this week, including some of yours and maybe, or I should say some of mine and maybe your favorites like DVN Energy and Occidental Petroleum and Energy Transfer. So I thought I'll take a few minutes and just compare some of these stocks and do a quick flyover. Now, some of you have kind of seen this format before. So what I do is I pick 5 of them, and I can only pick 5 because bar charts only allows me to line up 5 of them in a row, but I think that's enough. And what I'm going to do here is talk a little bit about some of my long positions, which includes Enbridge and Energy Transfer, Occidental Petroleum, and DVN Energy. And then one of my prodigal sons, right? So Petrobras was a stock that I was long in for quite some time. I sold it at a profit, probably pulled the trigger too soon. I usually tell people I don't like a lot of noise in my portfolio, and Petrobras was a lot of noise at the time because they had the Brazilian presidential elections in October last year, which would have been 2022. And in the run-up to that election between Lula and Bolsonaro, I thought, you know what, this is just too much noise in my portfolio, so I would just exit the position. And at the time, I took a little bit of profit, and so at least I didn't make a loss, right? I have 2 rules. Rule number 1 is don't make a loss. And rule number 2 is don't forget rule number 1, right? So anyway, what I did was I sold out of Petrobras, so it's not one of my long positions anymore. But, you know, if there's a strong pullback on Petrobras, and depending on what they do with the dividend, I might decide to get back in again. But let's put that aside for a minute and just talk about these 5 and compare them, right? So the odd one out for me is Petrobras, second from the left, because this is the one I no longer have long in my portfolio, or my client's portfolio, as it were. So effectively, it's one that I dumped and said this was my worst performing energy stock anyway. There's a lot of turmoil in Brazil. Let me just get out of it and sit on the sidelines for a little bit. So these stocks are similar, but they're not the same, right? So they all trade on the same stock exchange, the NYSE. That's why I put the green arrow at the top of the page. But at the bottom there, when you look at the industry, you can see that Occidental, and by the way, the name of the company is left to right at the bottom of the screen, so you can follow along. But Occidental is U.S. integrated oil. Petrobras is emerging markets integrated. By the way, Petrobras remains one of the largest super majors that you can buy for probably the cheapest price. Except I can't speak for Brazil and I can't speak for the dividend, right? But there's no question about the fact that Petrobras is super cheap. DVN is a U.S. exploration and product company. Enbridge is a oil production and pipeline company out of Canada. And Energy Transfer is an oil gas production pipeline MLP, which means it's a master limited partnership. So between these, there are a couple of unique little anomalies that you should be aware of if you are long or if you want to be long in any of them. So the first one, for instance, for me as a US tax person, is the fact that if I were to buy Petrobras, I would be buying Petrobras ADRs. ADRs, as you can see at the bottom of the screen there, where it says Petrobras, is American Depository Receipts. So I'm not actually buying the stock. I'm buying ADRs if I were in the US, which is where I am. And then over on the far right, you can see Energy Transfer is an LP or Master Limited Partnership, which means I'm buying units and I become a partner in the partnership, which means they will issue me a K1 for tax purposes, which will complicate my tax filing just a little. Right, so that's all about the 5 stocks that I'm comparing. So let's take a little bit of a deeper dive here. So for the technical guys among us, the line item that I'm looking at here is the 20-day raw stochastic. If the number is above 80, that means the stock has been overbought, and now is probably not a good time to get into it if you want to open a new position. On the other hand, if the stock is a stochastic score of below 20, that means it's oversold and you could probably buy it. And of course, anything in between requires a little bit more due diligence. Now, if you use the 20-day raw stochastic here as of today, then you can see that Occidental, 88%, Petrobras, 97%, DVN, 98%, and Energy Transfer, 91%, are all overbought based on its 20-day raw stochastic. The odd one out here is Enbridge, which is the Canadian oil and gas and pipeline company with a stochastic score of only 36. ironically, that's also the one that the analysts are collectively all in agreement saying sell, 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 sell. Now you can see at the bottom of the screen here on this little table, it says last month's opinion, and it's improved significantly for Occidental from 88% sell to 24% buy, and so on and so on and so on, but not Enbridge, 100% sell, 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 and it's the lowest score on the 20-day raw stochastic. So if you're a technical guy and you think the analysts have got it all wrong, maybe you can tell us in the comments why and educate us all and make us all a little bit smarter than what we were before we started watching this video. From a performance point of view, I'm not really interested in 1 day, 5 days, 1 month or whatever, but it is interesting, as I just said at the start. I probably pulled the trigger too soon on Petrobras because Petrobras so far this year, in the last 3 months and 6 months, has been a stellar performer in the energy sector. So over 6 months, Occidental is down 1.5%, Petrobras are up almost 30%, Devon is down 13%, Enbridge is down 9%, and Energy Transfer is up only a little at 1.55%. So from a performance point of view, the one that you should have been in, which I don't know if it's a good time to get into it now, but we'll take a look at the snapshot of the stock in just a minute, which will make us all a little bit wiser. But really, this year, if you wanted to be in energy, you probably should have had Petrobras in your portfolio and you would be happy and smiling. How about the key statistics? So this is an interesting benchmark for me at any time, right? So what I'm looking at here is annual sales. So the third row from the top, annual sales, 36 billion, and the market cap, also in billions, 55, right? So we can say this company does about, just round and work with me here, approximately half of its market cap in sales. Okay, I mean, like, I know it's not half, but it's sort of there or thereabouts, right? So let's call it 30 billion in annual sales, 60 billion market cap, sort of there or thereabouts. Similarly, Devon Energy, 19 billion, $34 billion market cap. And then we have Enbridge over here, 41 billion in sales, $73 billion market cap. So I know none of these are really times 2, but let's just pretend they are. And let's say it's sort of 1.5 to 2 times the market cap versus sales, right? So if you look at it from the point of view of a price to book, price to sales ratio point of view, you're going to look at some of these numbers and say, oh, that's really, really interesting. The reason for the green arrows here are the 2 outliers, right? So Petrobras is a company that has a market cap of only $90.8 billion, but it does $124 billion, $124.5 billion in annual sales. So its market cap is only about, let's call it 75% of its annual sales revenue. Similarly, Energy Transfer is a $90 billion sales company with a market cap of only $41 billion. So there's more than a 2 times variance here in terms of the market cap compared to sales, right? So 41.6 in terms of market cap is only 83.2, and this is 89.8, so almost $90 billion in sales. So at a glance, using the key statistics as a measure, you can say that Petrobras and Energy Transfer, regardless of what the ratios say, the stochastic, the price earnings, etc., still are seemingly undervalued based on the fact that they drive a huge amount of revenue, but their market cap is relatively small in comparison to their annual sales. The other thing we can look at over here is earnings, of course. Now, I said a number of them are going to be reporting soon. They'll all pay a very, very hefty dividend, with the exception of Occidental Petroleum. Oxy is currently only paying 18 cents per share per quarter, which is 72 cents per year. And then the rest of them, I mean, most of the people who are in Petrobras are really in Petrobras just for the dividend, never mind the stock appreciation. So that's a double whammy, because you got like a fistful of extra shares of cash in terms of the dividend that has been paid to you so far, I think once this year. And in addition to that, you have the uptick in the stock, which is about 25-30% so far year to date. The rest of them pay a good dividend too. So if you're looking for a dividend stock, all of these are good. How about the price earnings ratio, which is probably the most valuable ratio in terms of telling you whether the company is a buy or not? Now, the energy sector, and you would know this from yesterday's video when I talked about Devon Energy with its price earnings ratio of around 5.7, 5.8 right now. So the forward number on Occidental is 7.5. So the industry right now, the energy industry, is sitting just over 6.2, in fact, on average, the price earnings ratio. So based on that benchmark as a comparison, Occidental is close, but actually slightly more expensive than most of its peers in the oil and gas industry. But look at Petrobras with a PE ratio of only 2.6. It remains the cheapest super major energy company that you could possibly buy. But I'm not saying buy it because I'm not sure what's happening in Brazil, man. You know, it's like the political situation is still sort of, well, it seems to have eased after the election, but at the same time, it's still sort of a little bit shady. You know, I'm not exactly sure what Lula's next step is going to be. And there's a lot of people in Brazil, including politicians, pushing back against this massive dividend that Petrobras is rewarding its shareholders with. Devon, unlike Oxy, is sort of more in line from a PE point of view with its peers. So I just mentioned that the oil and gas industry collectively currently has a PE ratio of just over 6. Enbridge is the sort of expensive one from a PE point of view at 17, and Energy Transfer is, you know, kind of nicely priced with a PE ratio of just under 10. The US stock market right now, so if we look at a benchmark like the S&P 500, the average S&P 500 price earnings ratio over the entire index is over 15. It's about 15.8, which means using that as a benchmark, Energy Transfer at 10 is significantly cheaper than the rest of the industry as a whole. If we look at this picture over the past 1 year, then the picture for even Petrobras looks a little bit less interesting than what I just showed you on the previous slides in this presentation. So, of course, a 1-year period is probably a reasonably decent period of time to compare any stocks, you know, one to the other and to the market or whatever your criteria might be. So we have 5 lines here. This little sort of black squiggly one in the middle is Occidental Petroleum, because this is actually Oxy's performance slide. And then I just added the other 4 as a comparison. The winner by far was Energy Transfer over the past 1-year period. In other words, from today going back 12 months. The trailing 12-month performance for Energy Transfer was 22.8, so almost 23%. We have a bunch of them sort of stuck in the middle here. There's a little negative there on Devon at -4 over the past year or so, and a small positive for both Petrobras and Oxy, 1.7 and 6.9 respectively. And the loser by far is Enbridge. But having said that, though, Enbridge is a dividend aristocrat, and you can buy Enbridge and pretty much bank a approximately 7% dividend yield on an ongoing basis. And it's good as gold. It's been paying that dividend for a long, long time. And of these stocks, the one that's most likely to kind of fiddle or mess with the dividend is probably Enbridge. Enbridge you can buy in Canada on the Toronto Stock Exchange under the ticker symbol ENB. And the ENB I have up here is also the US ticker symbol on the New York Stock Exchange. Let's take a quick snapshot of these 5 stocks, then I'll wrap it up. You can buy Occidental Petroleum for about $63 per share. It's a mid-cap $56 billion company. The PE ratio is decent right now. The dividend is not at all anything to write home about, so you're probably not buying Occidental for its dividend yield. You're probably buying it for its stock appreciation, which may or may not come, who knows, right? Right now, it's sitting just left of center on the 52-week range. So the 52-week low is $55. The high was 77, so it's at 63. I think there's a little bit of run rate sort of to the right on that one, going up a little. Held by institutions, more than 77%. Of course, the majority of those shares are held by Berkshire Hathaway. And then the usual suspects hold the rest: Dodge & Cox, Vanguard, State Street, etc. I don't think BlackRock is into this one. The short interest is a little bit higher than most of the stocks that are in its peer group. And then you can see the underperformance, the black line here of Occidental Petroleum compared to the indices. So if you had just bought yourself an index fund like SPY or VYM or something like that, you would have outperformed Occidental quite easily over the past 1-year period, which is the graph I'm showing you there. How about Petrobras? Same thing, right? An underperformer versus the 3 indices, the Dow Jones in blue and the S&P 500 in purple, and the beigey brownie color ones, the NASDAQ, easily outperformed Petrobras over the past 1 year. It's still kind of cheap at $14. It's a $95 billion company, so this is a large cap stock. PE ratio of only 2.36. As I said earlier, this is like one of the cheapest super majors you can buy in the energy sector. Man, I don't know if this dividend is sustainable, not so much from a cash flow and a free cash flow point of view, but certainly, and certainly not from a revenue or profitability point of view as well. It's easily sustainable. But I don't know what the government is going to do, because the government can influence the stock at any given time. And there's a lot of pressure on them to cut this dividend, because this dividend is just unnaturally superb. I mean, this is fantastic. If you've been earning this dividend, in addition to the stock appreciation, you've done really, really well. Congratulations. And then, of course, on the 52-week range is sort of trending up towards the high side here. If you were able to open a position in Petrobras at under $10, man, you have done so well. I'm so proud of you. Well done. Let's take a look at DVN Energy. Same thing here, the graph. Horrific underperformance year to date. Well, I probably shouldn't say horrific. It's not that bad. It didn't crash completely. But yeah, if you look at the black line here, compare it to the indices. So the Dow Jones, S&P 500, and NASDAQ easily outperformed DVN, which has been an underperformer, not only in its peer group against other oil and gas companies, but also against the market as a whole. Sitting way left of center. Its 52-week low is $44. That would have been a sweet buy. Its 52-week high is $78. We're a long way from that. I'm not sure what's going to happen when they announce results later, but we'll see. Market cap 34, so a mid-cap size company. Decent PE ratio, 5. The annual dividend yield is a mix of fixed and variable, so this is not a fixed number. Held by institutions, almost 70%. Not too many shorts, not a lot going on here. Decent company to own and hold. I wouldn't necessarily open a new position in DVN Energy right now. Now, in Enbridge, I was sort of tempted to potentially look at adding some Enbridge. The price, $36.80, seems quite low. As you can see on the left-hand side here, it's sitting way to the left on its 52-week range, so there's some run rate there. It's a $74 billion company, so once again, it's sort of between a mid and large cap stock. It's been a terrible underperformer. Sort of the graph looks very similar to DVN Energy over the last year or so. But look at this PE ratio, right? It's almost 40. So this is a little bit too rich for me in terms of opening up a new position. So if I wanted to open a position, or if I wanted to add some stocks, regardless of the fact that they pay this $2.62 dividend, which currently yields about 7%, I'd probably want to do a little bit more homework and decide whether now is a good time to get into it or not. Only 50% held by institutions down here at the bottom in the middle, 48.42. Not a lot of shorts either. You don't really expect these stocks to go down from the level that they currently are. In fact, if anything, being somewhat bullish, I expect energy to go up. Let's wrap it up with Energy Transfer. This is a sweet deal here. $13.29 is your purchase price right now. It's trading high. So in its 52-week range, between $10 and $13.67. So it's trading way to the high side. You may want to look for a little bit of a pullback here. There are days, when some of these companies drop 3, 4, 5% in one day. Maybe that'd be a nice day to pick up some. Market cap, $41 billion company, so mid-cap in terms of size. This has been an outperformer, unlike the ones I just showed you. This is the odd one out, because Energy Transfer has actually been outperforming not only its peers, but also the indices. So you can see on a one-year graph, there's the performance, the black line of Energy Transfer, and then the 3 lines being the indices. It's comfortably outperformed the indices. And even as the market started steadily increasing over the past couple of months or so, Energy Transfer still held its own and held its position sort of up there amongst the winners in the marketplace. Decent PE at 9.85. Stellar dividend yield. This is a great yield of $1.24 on a $13 stock. That's yielding almost 10%. Not too many shorts. 31% held by institutions. There's not a lot going on here. I'd hesitate to simply call any of these stocks a buy. In fact, the one that looks most like a buy to me is Petrobras. But I would definitely want to take a breather. If I held a position in Petrobras right now and I was in the money, I might sell some, take a little bit of money off the table, because nobody gets poor taking a profit. If I wanted to add some, I might be a little cautious and wait. Just to see sort of what happens with the government impact or outcomes related to the dividend, because as I said, there's a lot of pressure on the Lula government to reduce the dividend. of this cash cow, which is Petrobras. Only 2% short. Nobody is shorting Energy Transfer here, so it looks pretty good too. So that's kind of like a wrap on the 5 stocks. I have 4 of them in my portfolios. I also have most of them in the portfolios of my clients. So as much as they would be happy with me for having equities like Energy Transfer in their portfolio, they would probably be just as anxious as I am awaiting Devon Energy's quarterly results for the quarter that is going to be announced today. OXY is not a stock that I hold in client accounts. I started buying OXY when most people thought OXY was going bankrupt, and I wouldn't put any of our client accounts in such a predicament. So on that one, I took the chance all by myself. And Enbridge, as I said, is a dividend aristocrat. So, you're going to get a 7% yield. And right now, the stock price is low, but the PE is super high at over 40. So I don't know, man. Like, what do you guys think? There's 5 stocks there. I'm sure many of you are long in some of them. You might even be thinking of opening a new position in 1 or 2 of them. So let me know in the comments. Let me know what you think. And thanks for watching. Take care. Bye-bye.